Actually, that part about discipline was really good. Like, it's fine if you're not getting it right now, but discipline being hard, I mean, if you just stick with it, that whole concept, I think, super applies to trading. But hello, everyone. Good evening. Welcome to the last ever, whatever kind of stage presence voice I can kind of make up. Asian session, at least for now, because right now I'm focusing on maybe honing down a little bit more and getting up off of Asian, not over trading. I'd like to be able to compartmentalize that 2 or 3 trades a day. Um, Not easy to track or prove. Funding ticks is awesome because it kind of shows that awesome. But as you guys already know, starting with the disclaimer, we've got about 5 minutes till 8 p.m. In theory, we're gonna have a lot of volume. We had a huge day yesterday. We're already down 0.21% today. But let's go see what the market gives us. So, disclaimer, you already know. Don't risk what you can't afford to lose. Trading is a game of can you stay in it, right? You have to just survive the period of losing, the period, the down parts of your strategy, the negative months in your system, your automation. And at the end of the year, you'll be net positive. But go take any instrument, cryptos, current, QQQ, anything. NVIDIA, we've had red months. NVIDIA doesn't just disappear from ever if we have a red month, right? It keeps going, and that's why it is what it is. So something to think about there. If you guys have not already done so, please check out the link tree. I think on the website we've got the prop firm stuff up there. If it's not released, it will be shortly. So definitely check that out. Scan this link tree. You can find all the prop firms that we're working with. Use code 6FTC in general. If it's not 6FTC, it's going to be on the website or it's kind of linked there. No secret. I know it. You can get a slightly cheaper one, but take Profit Trader, just best payout policy, no nonsense, no consistency rules, biggest payout. Like I just think they're easy to work with, easy to work with, and I could not ask for more. Having said that, you guys know we talked about this morning. Funding Ticks has this $50 account right now, which is really cheap, $50, no activation fee. So if you're losing already and you're striving for this big thing with Apex and you're trying to like get good at the consistency rules and all the things, this might not be a bad place to check out. So it's fundingticks.com. This is the code. It'll be in the discount. It'll be in the link. If not, at five, what is it, FT35 or something is also how you'll get that price. So I think it's worthwhile if you're serious about trading. I think it's worth checking out. With that said, so the market dumped today. The market dumped really well. Beautiful. Took 2 losses this morning, and they were sizable because, well, for multiple reasons, and I can kind of go over why as we work on the mirroring, but it hits harder when there's other stuff happening. So either way, we caught some of this sell. Only one of the 2 entries I took was mirrored properly. So the bigger one, the one that would have balanced everything out, was not. So the whole big move I didn't get credit for in all of my accounts, just probably because the trade of 8 rate limit thing that they got going on. But yeah, that's about today. Needless to say, we were right on the direction on ES. Just too tight of management. We had to wick up first. We had to take some, we didn't even really take the liquidity. So I think that's extra stupid, but this is real trading. It's the good, the bad, and the ugly. As of right now, we are sitting very low. As of right now, we've cleared the targets that we wanted to hit. I was not in that trade to hit those targets. This is where we're currently sitting. So we've got yesterday's low. We're still sitting kind of decently above that, unlike on NQ, where we've already taken yesterday's low. So this has got a lot more downward pressure, I think, than ES does right now. If we're to continue down, really simple, where are we going? We're coming all the way down into here, which is what, 334? That's going to be our next level. Of course, there's an enormous imbalance here too. After we take this, there's just, blue skies, but to the downsides, nothing stopping us to the next levels. So we'll see. Of course, we've got some pivot points and some quarter points. I mean, really looking for any measurement we can find. By the time we take this, we're already sitting here at this previous high. So we're gonna see. We're gonna see if we get a bit of a pop up. I think we closed yesterday in what, 1.2 down-ish, give or take, maybe. Not 100% sure. I think it was 1 point something. It was definitely 1 point something that we were down. So full body candle, we've got 2 minutes left on this 1 hourly candle. We're closing pretty strong, meaning that next candle could wick down before we get the retracement. Or if we're going to continue down over Asian and overnight London sessions, we might spring up a smidge during this kind of 8 p.m. open and then pull down, right? So we want to be paying attention. Obviously, lots of imbalances left behind, but we're on a tear to the downside, and I don't think there's a lot stopping it. So ES, looking to take this low, might be the easier trade, although not my best friend today, not at all. um, to come take this level. We're sitting much closer to yesterday's close. And again, by the time we break here, we have a nice previous high slash imbalance. This was a news candle. This was a data candle, came back, retested, broke back above. We're sitting in that area now, sitting at previous highs that we really respected. We respected this historically for, a good week or so. So really curious to see how this plays out. And we haven't touched gold too much. We looked at it a little bit this morning. Let's pull that up. This one's going to be much messier. I think we finally deleted. Nope, we still have that. Our nice little area of interest that we had kind of from a hot minute ago. We drew this way back there. So if we are to continue selling, we've broke through some massive trend lines. Of course, we've got an imbalance here that we get to respect. If we're continuing down, we just filled that void, this area, which I was on a call today. We marked this up knowing, hey, we're not stopping right here. We're going to keep going to at least in this range. And that's kind of where we're sitting now. So we might come a little bit further. What is that? 350s-ish. And then if we break and close below, that means break and retest on the smaller time frame. I'm looking to take this next set of lows. But this gap is going to be super magnetic. So I figure it started here. What is that? 29s. So this should be fun. But that's our 2 minutes. We are rise and shine time, evening, Asian. I think the spread has been a little bit wider than, let's turn our indicators back on. There we go. We've got some upward pressure. And we've got 2 minutes on this candle to go ahead and watch and observe. Of course, this is bearish. It couldn't be anything but bearish right now. There was just no way. Let's see what this does. That previous low is already done. Again, we've already taken yesterday's low. Nice wick. Would like a bit of a retracement, at least 0.28%-ish on that big move down, which is going to give us 0.4% on the day, right? That's what I'm hoping to see overnight or by tomorrow's close. But we'll see. We've been calling this sell for a little while. I still think we've got a nice, I have to go measure it, but probably 5-6 still percent to the downside. Yes. Volumes is Japanese car makers. Maybe that's the reason, huh? We shall see. Anybody, I know a lot of people had a rough day yesterday. Hey, Jerome. Anybody close out positive today? I did not. I am red on the day. Red. And I haven't had a red day. I guess when Nathan was when we had some family stuff, I had a red day. But other than that, I haven't had a red day like that in, gosh, probably a little over a month now. Gold to the upside. NQ. Bearish candle, spring on the end. Bearish candle, spring on the end. ES, though, hasn't taken that low. Now we're going to wait. We're going to see. We shall see what this gives us. Yeah. Oh, I better pull this up to make sure I'm locked and loaded. Better minimize this. Hopefully we get a nice little pump to the upside. ES has got a little bullish candle. NQ is forming bullish. This is completely counter trend. If we buy this, it is going against every amount of selling volume out there. So you've got to know that. I mean, obviously this 50% target is going to be pretty tight. We're going to be looking to kind of take these next lows, just come up and kind of make that stair ladder thing. But otherwise, the downward move, there's not a lot stopping it to the downside. So you can kind of trail that a little bit differently. NQ still in range. And yes, I don't know why the Japan stuff is so significant right now. If we can get above this moving average and stay above it, preferably a retest, we can at least get back up into VWAP. The 50's not too far off that either. But for how much volume we've already had, this isn't going anywhere.
No volume whatsoever.
I know, right? We might have to just say no, thank you. Oh, there's some coming in. We're still bearish. There's just still far too many bearish orders out there. There should, in theory, be some volume right here, though, just in this level at an hourly open, but there's really not. And
Do we
gold,
have any big news tomorrow that might be having people waiting?
I don't think so. Gold's finishing that zone though. For those of you guys who are in that. Wednesday, do we have any big news? I don't think this is a really low news week, I think, when I looked. There's not, no, there's literally no really red folders. There's speeches and stuff, but there's not going to be a lot to stop this from this big tear to the downside that we're seeing either. Gold's beautiful. You have some room if you want to take gold as a trade this evening. I'm going to turn this back off for a second. Mostly because, like we talked about on that bigger time frame, what do we have? If we go all the way to the left, we've got this area. We're sitting pretty close to it already. But below that, we'd be looking to kind of take all the way into here, which is going to be a significant area. So you've got a pretty good area to kind of come trade into. But the move has already happened, so not super in love with that one. At least the beginning of it. We've wicked it down. We've hit one target. As long as we stay below. Nothing. I couldn't even take a JGS if I wanted to because it's just not setting up. I can't. Hey, try that again.
Maybe Bitcoin?
Bitcoin. Bitcoin's up a little bit today. Oh, that's so choppy on this time frame. You could buy Bitcoin, which is everyone's key, tag word anyways. Double bottom. You're with the trend, coming all the way back up. I haven't taken, I think I took Bitcoin on one of the props at one point. I know some carry it. I don't know about the rest of them. Bitcoin trying to break out to the upside. Gold's back in range and ES still bearish. No follow through. You're in bearish territory and you have lows to take on ES and Q. You've already taken those lows and we wait. I'm on the 2-minute time frame. I will wait for one entry. I'm only going to be taking one tonight. I already decided earlier. First off, I'm right on the day, so I shouldn't be trading anymore. Secondly, I want to focus on being able to pull. It's hard to do on TradeZilla, but like on some of them, some of the what is it, prop firms, and they have their own calendar, so you can say, wait, that's 3 trades on the day for that account, and that's it. And there's going to be like outliers and things like contracts got switched over, was doing more micros or what have you. That's fine, but in general, I want to be able to see like a month of 3 trades on average most days of the week. Like that's going to be the goal. And I have decidedly hit above that today. Because I took one pre-market. I took 1, 2, 3, 4 technically during New York Open. And then a bunch of others. Today was the day for it. Let's see. Nothing.
When does volume normally come back into the market again after, like, when is the summertime normally considered to be completed?
I would argue that you could trade Asian in theory any part of the year or like any session. And if you asked me 5 years ago, I would have said you can trade any session provided you're trading the targets that are associated with that session. I don't think this dip in volume is based off of summer personally. I think it's just we've been very spoiled with this Asian action overnight that has been, and look, this is more London, but we've been spoiled with these Asians that have been moving very big for a while. Whereas before, the Asian session, I can't even talk today, would be this big. I'll pick a different color, but would be this big on the day. London would be this big, and then New York would be this big. Or either way, in general, London and New York would be a larger amount of volume or move than, say, Asian, but that has not been the case. There's been a flop in that, I think, with everything with China, all the stuff with tariffs. I think just whatever the reason is, I don't know, I'm not the expert. But in general, we've never had that much volume in Asian. And right now, I think it's kind of slowing back down a little bit too. So it's just a little bit smaller. This is Asian. This is Asian. And the spread is getting harder to fill. If you watched on Tradeovate, you'll see these little lines over here on the side, or depending on what your broker, if you're using a MT5, I think Ninja Trader has one, but you'll see the green and the red kind of widen up if you expand this enough, and you'll see price just skip over, okay, that take profit. You'll see maybe my take profit was here and it wicks up, it'll fill that order here, and vice versa with the stop loss. It's always almost always against you, but your stop loss was here, but this was so wide, it doesn't actually fill that stop loss until here. So I think for the purposes of trading, like we're trying to do, what like I'm trying to do more accurately, which is scalping and really in and out, I don't want to be in the Asian. If I'm going to pick a couple of sessions, I don't want it to be Asian.
It makes sense what you're saying because the thing is, like trying to force a trade. And I know you're not doing that, but I know like I've done that before and just like, okay, market, I'm here and I'm ready. You need to move, you know, and it's like womp womp womp. So just getting better at just saying, okay, there is no trade and counting that as a success. Like basically there's no setup. And I think actually twice that happened recently in my pre-market session.
I think the hardest part right now for me is to see this kind of chop and whoopsie, that's not the box I wanted. And then just saying, okay, we're staying out. Like we went up, we went down, we went nowhere. There's no trade right now. It doesn't matter if we want to trade, there's just right now, I think to take the reliable, successful buy, the one that we would want to write home about, we'd want the break and the retest, not only of like the JGS strategy, but the breakout too. For the break to the downside, we'd be breaking down along with this downward trend. So we'd be trailing tight, which is fine. But we're not going to get that kind of volume. Figure this is what, an hour or two? We're already, I guess we're not too far. We're only 10 minutes into this, coming up on the 15-minute candle, but the 15-minute candle is just, oh, it's bearish, definitely bearish. It's just not going anywhere. It's not deciding a direction. And if it's deciding one, it's down. If it's deciding, it's said to the downside.
And I think that that's where it's like important. Well, I don't know. I started to think the other day, like a specialist. I was like, if I had $1 billion, where would I get in at the mark? Where would I buy and where would I sell? And I just kind of marked the charts because, with those bigger institutions, they really don't have to get in at certain places. They can wait, basically. They can afford to wait for price to come to them. And so I know like you like to mark up the charts, which is so helpful. And I think that kind of shifted my thinking as well. I was like, okay, if I was gonna buy, if I was on the buy side and I was an institution, where would I buy? And then if I was going to sell, where would I? And it was really interesting to see how price reacted to those areas because that's exactly where they kind of came in and did stuff. And so right now, just yeah, they don't seem to be interested. Maybe somebody's interested now. So sometimes I want to come in and say, dump your money. Somebody come buy some stuff. Come dump your money in.
We got our arrow to the downside, but we didn't close, and that's the kind of volume. But back to what you were saying, Breaka, we do know why they call them institutional levels, right? We know why that's where those orders are, is because you can't take 1,000 contracts of like the full size NQ, and this is the mini of NQ. This is not the full NQ technically. This is still the mini. It's the bigger mini for our world, but it's still not the full. So you can't have 1,000 minis, micros, or the full size, okay? You can't have that just taking all these little baby spots. There's no one to fill those orders. If I'm buying, I have to have somebody selling. There's got to be someone to fill the other side of this. So when we talk about institutional levels, and it's not something we talk about it a lot, but you're still looking at key levels. There has to be a lot because for them to decide to sell into this, they're using bigger time frames. They're selling a lot of contracts in, waiting for a pullback and selling more in, right? Because you can't just sell, 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 sell 1,000 contracts or buy, sell, buy. There's no one to fill those orders. There's no one on the other side. So where the big people are putting money, they might be looking at strategies and algorithms and stuff, but that they can still only execute at institutional levels. And the reason they're called that is because that's where the money is. That's where the other sides of the orders are. They need a bunch of retail traders and other hedge funds and everyone else to be on the other side of that order.
Very true. And I see somebody put something in the chat. It was interesting too because I don't know, like you know how like when you're younger or growing up or whatever, there are just certain movies that stick out to you. And one of my favorite movies years and years ago was Trading Places with Eddie Murphy and Dan Aykroyd. And I just recently came across a video on YouTube that was explaining it, and I was like, oh, they were in the futures market. And so now, learning what we're learning now, being in futures, I'm like, oh my gosh, I actually understand, even though the movie came out when I was a kid, but I was like, okay, this is interesting. I was interested in it back then, even though I didn't know what was happening, but I just thought it was cool. But now that we're in futures, anyway, I just thought that was cool.
Now I'm gonna have to watch that movie because I have no idea what movie that is. We got the break, guys. We got the break on ES. We got the NQ is breaking. If we're taking this, we're taking this with a grain of salt. We're protecting really, really quickly. I'm not giving it much above this moving average. I'm not even in it and it's already pulling back up. Figure a 1 to 1. That's a 1.5 to 1. I'm still not in love with this. The tail, we've got, so this one candle, hold up. I'm going to go to another time frame. 1 minute's got a tail. I'm really going to want to either retest or get below that candle to do my best not to get trapped if I even end up taking this, but we'll see. Do you think algorithms moving through the market? Absolutely. Well, no different than the dragonfly that we created on our own little small level. Those are meant to always be exposed, okay? Or be exposed during the last hour or the first 1 minute of the 15-minute, 30-minute, 1 hour, 4 hour candles. But they're meant to constantly be exposing you to the market or being, exposed to the market, getting these little micro moves, and they have their major methods as well. But those algorithms are meant to always be exposed. So that would be during all sessions, with the exception of whatever that hedge fund's rules is. Like if it's news, if it's Asian session, if it depends on where they're located in the world, I mean, and what instruments are trading, I'm sure. But the idea is always exposed. That's the purpose of an algorithm, is to be exposed when all the human traders can't. It's not just accuracy. For anybody who knows anything about algorithms, they know that algorithms aren't necessarily producing that much more in gains than their best traders. It's just that they're doing so in a systemized way without the emotion, because algorithms in general are turned down to such an extent that a human can come in and save the day. And even the hedge funds algorithms are kind of programmed that way. They're meant to make this small percentage on the account, and the human efforts or the people part of it is still coming in to kind of double down on or recover from or get in here or adjust price here or sell here or buy here. They're just getting the little marginal gains. They're making the marginal moves. So for that reason, I think the answer to that is yes. I'm not in this yet, guys. We're still kind of failing to get below this. It's going to be a late entry if I do get in. Just not in love with the move. We've got this descending channel. I'm going to delete this because I'm still not in this. We've got this descending channel. I'm going to kind of ignore that wick. I just don't want to get, get wicked out and then get taken out. Because this in theory is a reversal potential pattern. I'd feel much more comfortable with the reversal trade this evening. Probably shouldn't, but I do. ES hit one very tiny target, not a lot of points that we missed out on, but it did hit it. It's less than 2 points. Not a lot. Not a lot that's being offered tonight. And it's not just this, whether it's 8 p.m., 9 p.m., 7 p.m., this whole session is meant to be like you get your couple of ticks or points and you're out. Get your couple of ticks and points and you're out. If you're trading this or trying to look for your manual trade or get that extra day in your books or something, it's not to say you don't also have a move that would count for something, because this does for sure. That's 60 points.
It looks like too, it is in session sometimes too. If you can find like an entry with a higher time frame and you let it play for like at least, several hours leading into London, sometimes you can hit your targets. It's gonna sit through a lot of chop for a while, especially on the days where there's no volume.
Yeah. Are you still doing mostly Project X, Jonathan?
Uh yeah, for the most part, yes.
The benefit of Project X is you can put your order on and go to bed. Like there's no, did this close? Was it a ghost order? You can put your order on and go to bed. It just works the way it's supposed to.
Oh, absolutely, absolutely. They did have an issue though with freezing one of the other days.
Well, yeah.
Sometimes that can happen, and obviously sometimes the late processing for the order, like it just doesn't execute as fast. But if you're trading a higher time frame, what does it matter as much?
I think it slows you down versus being on Tradeovate and seeing the candle do this. Because on Tradeovate, you see I mean, it's crackhead method on Tradeovate compared to where I'm from. Like it's crackhead information. Like Project X is smooth. This is slow, and yes, it's a little lagged. There's no way around that, but it's smooth. You can say what you want, but you can't say that's not the case. All right, guys, not in love. Um, let's see. We'll see, guys. I'll give it a couple more minutes and hang out. Anybody got any comments, questions, things that they want to go over? I'm here for it. Gold moved down 1.5 targets, popped up, really failed to kind of get in. Well, we broke above, didn't stay above. And now we're moving back down to that downside. So nice little retest. And this is ES. We broke down, we took the low that we wanted to take. So if we get above here, making that a kind of a JGS strategy, I'm in. If we get above our box, I'll be in, just knowing I can take this for a small move to the upside and I'd be pretty good. NQ, we've already taken lows. The first 15 minutes of the hour has already been formed. Even this hourly candle has a fair value gap. Not that that is the end all be all, it's just worth looking at. And let's see. Got some volume stepping in, which is nice. Okay, I'm gonna get ready. We're sitting too at the point of control area, so we really want it to kind of, we got another wick. Hopefully we're not just coming up to take that and then leave. 460s, value area high. So point of control is sitting right here, kind of mid-range of our box. Value area high is 460s. That would be a beautiful trade if this can play out. But for right now, we've already got our next 1-minute bearish candle saying, nope, no thank you. Love this candle, retested, failed to get back below. Another bullish candle forming, but previous one has a nice spring to the upside, so that's not that sexy. And here we go again. Just a lot of downward pressure. There's no buyers wanting to come in and take over. It's markets like this, I wish I had a book map. I tried it out for a little while. I was going to use it long term, but I was like, that's just added noise. Because this is where you need to see like where the major orders are at. I don't currently have it, but this market, I need it. And nope. No follow through. We break below that wick. 410s. ES looks more of the same. And we're just chopping around. You see the spaces breaker though too? Like this is getting more and more frequent here on the Asian session where it's not there. We broke above, retested. We are definitely not with the slow MACD, and even the fast MACD is not in agreement that this is time to buy. No one is in agreement. Another bearish candle. No, sellers are too heavy. Yeah, we could have, would have, should have taken an entry, but it just hasn't a retest here on the moving average. We technically tapped below, but in this, I'm just not in love with any of these moves. And so I'll be wise and sit on my hands and probably just sit it out. If it was a great setup, I would take it, but there's no setups I'm in love with. This right here has a lot of potential to the downside, but we're flattening out. Value area of low is literally, we're at there, as so is the point of control. 405. So we're already at the low. I'd like not to trade into that, knowing that best case scenario, we're going to get a couple of points out of it, which could happen in a candle like this. At least ES has a little bit more room to the side.
I didn't even look at US 30 at the after we got off. Did it actually follow the trend and go down as well, or did it
It did. This was what it was doing this morning, and it gave it all back and some. So on the total move down was still less than 1%. But mind you, first we moved up 0.5%. So that's a sizable move. It did.
But I noticed with that too on the daily, it popped off the top of the daily like 3 times of that range. I'm glad I got out before it reversed.
That's right. You were buying that.
Yep. Yeah. I was done by 10 or something. I don't know. I've gotten really good at just putting on the trade and just letting it play out for the most part, especially when I feel like the analysis was done.
150. This moved 1.58 down today. Okay. 2-minute time frame NQ. We're still sitting at the bottom, but there's just no follow through. If I were to take a trade tonight, ES has room to the downside. It has room just to take yesterday's lows as at a minimum. It did lag all day as opposed to what NQ was doing. But either way, I'm just not in love with the price action, and I'm already red on the day. So it's not an A+ setup, which I've never loved that terminology, but for futures, maybe it fits a little bit better. Either way, it's just not a good setup. This one probably better than NQ, which is, in all fairness, playing out. This is the 2-minute time frame. We wicked down, we respected the zone, and we pushed back down.
I actually might like US 30 for a sell.
US 30 also has room too. Maybe not on from where we're currently sitting. Even if I gave this plenty of room on the evening, I could still get a 2-to-1 just taking out those lows. So that's not a bad trade. I don't put YM on the most of the props that I'm doing. I do mostly ES, very occasionally gold, but NQ is the mainstay. Very occasionally ES and occasionally gold.
Mm.
And there's no follow through here though either. So, okay. We also this right here, we just bounced off the value area low. That's all we did was tapped it and then moved back up. Right here is the point of control here. So we've tested back into that to sell down, but now we'd really have to almost break below and stay below. If I wanted to trade it overnight, this would be the better trade, or YM maybe, if that's your jam on something like Project X. But yeah, I'm out. I'm out, guys. I don't trade oil. I don't know much about it. I mean, it's just not on this time frame, obviously, but I hear good things about trading this in Asian. I don't know a lot about it, but even we've got our breakout strategy on here as well as kind of JGS version on here. We did mark it up. Notice how this blue area of interest, as we call it, has been respected. We marked that up way back here. So we marked it up when we were looking, I think it was this day. We had this wick to the downside and we were pulling up. Let's see, this is Tuesday. That's Monday. That's Monday. This is where we were targeting it. And look, we respected this area. We came into it, bounced off, came into it, bounced off, and now this is where we're sitting. So for me, you're sitting above yesterday's high. If we are to buy, this was an imbalance. We've filled that imbalance. So this is no longer valid. This imbalance, we're going to delete the imbalance. This is our area of interest. It's still valid. Right now we're buying up. Not a lot to the upside. We're going to take off some of this noise. Do you trade crude very often, Jerome? I like how we wicked into here, came back. We did try to tempt people into the sells, but all we're doing is I'm marking up that right before that peak, right? Same area over and over again. If we drag that far across, there's a lot of action here. Eight p.m. has us selling down, but there's not a lot of left behind to the downside. So if we're gonna sell down, I think we're gonna keep selling down. If we're gonna get below this area, right now this active candle is kind of a decision candle. If we're gonna close bearish, there's no real imbalances, gaps to be filled. So I think we'd have kind of clear skies to the downside. Otherwise, I'd rather see, where's my squiggle line at? I do know the answer to this. In theory, I'd like to see something like come back down and then continue, or come back down, retest, continue. But either way, this is going to be where I make a decision if I'm going to sell. This is with the big time frame trend, so you're not in a bad position. And then as we come to see how price is reacting in this window, to see if we're going to buy back up, and that's just a retracement, a dip into this level. Kind of a janky head and shoulders potentially. Possible. If I was scalping, other than this wick we've got right now. Because right now, there's not a lot of imbalance left to the downside. Whatever made this move up is confident. It's easy. How do I delete this now? Delete that. I'll keep that stuff for now. I think your much more favorable option is retest to the upside. But this little wick that we're forming now could be the retest. Because there are imbalances. There is money left behind all the way up into here. There is area of interest to be tapping. Huge imbalance we did fill. And either way, this area is going to be a magnet. It's going to be a magnet for a long time. We broke below it, trapped all those sellers, came back up into it, knocked out all of every single seller possible, came back down, got every single person invited, and now here's where we're sitting. So I think taking out all the sellers more than once says we've got some buying all the way potentially up. But either way, I would scalp this. I don't know the points or ticks on this too well, so don't ask me that information. That I can't tell you. But figure a couple of ATR to take this high, let it make a decision if this candle confirms on a small time frame. So on a smaller time frame, we're kind of respecting that trend line a little bit. We got a little baby double bottom on the 2-minute. We're breaking above. Cool. We've broke above this little trend line. I'm assuming we're above the moving average. Got a potential JGS entry. So depending on how this closes, if we're buying up, I'd be looking to take these highs, any of this area, this whole area of interest. If we're selling down, I wouldn't necessarily be looking for a huge spicy move, maybe just half of it to confirm, wait for a retest and take the other half. That's how I trade this. No, Jerome, I don't. Honestly, I didn't even know what a fair value gap was into the last couple of years. This blue box you guys see here, if I pick a pair we don't have something on, let's go to the rusty. and I go to the 1 hour. You got to think, remember when I started trading, I was looking into crypto. I didn't know much about really any of that stuff. I was in a lot of different businesses and I loved trading. Well, I loved business. I learned to love trading. So the person I was looking into Bitcoin about was like, hey, join this company, IMO. So that's where I learned about trading. I, on accident, got pretty successful using just the line chart, the tick chart and the line chart. No kidding. Just this on my phone and the tick chart. Successful is the wrong word. We know that was luck. It was a fluke. But I made a decent amount of money and I was like, okay, every other business, I'm done doing this, right? Um, that of course didn't last forever. I ended up, having to step back, didn't know words, points, ticks, pips, none of it. Didn't know anything. And I got pretty decent at it. But one of the things about having like YouTube now, YouTube University is a great asset, I think, but it's also a deficit because you have 87 different approaches teaching you what's a trend line, what's a, area of interest, what's a supply and demand, what's a how to use fair value gaps, and this is a strategy you should use. That was my issue back then with IML, is remember there was like 40 to 60 classes a week, and you think that's what you want. But in that 40 to 60 classes, there were 40 to 60 different people telling you different things. And I really couldn't get an answer on a couple of things. So I kind of made up my own. Um, some of the, I'm sorry, I'm trying to think. Some of the support and resistance I use, I think definitely Stephen Lindor gets a lot of the credit. There's a few people who I can definitely credit to some of the ways I do things, but in general, if I'm on this chart, I'm going to go up to a higher time frame than the one I'm trading on. That is at your discretion. Don't listen to anybody when they say it has to be this, that, or another. The reality is, the higher up the time frame goes, the more valuable the data, right? The bigger picture you're seeing. Obviously, do I think the daily is as significant if you're trading the 2 minute? Probably not. But if there's a huge daily level above, it's pretty significant, right? There's no way around that. So for me, for the most part, I'd be marking up the 4 hour at the most. I might check out the daily or something if I couldn't find what I wanted. But for the most part, I use the 1 hour, like for most of the things that I've done. Now, if I'm at a point where I can't find a level, because like the gold today, for example, was just, I'm going to use micro gold. Let me take all this off. Oh, see, we drew that. Remove all the drawings on micro gold. We were sitting here. There's no way I would be able to see what I wanted without going up to the next time frame. So if I didn't need to go to the next time frame, I didn't. For me, the less time frames, the better. But 1 hour time frame, back to the rusty. We'll do the mini rusty. It's fine. All I did, as I got this from Jamie, right? He's an awesome guy. If he's watching, he usually does sometimes. But I normalize the view. This way, I'm always using the same amount of data when I'm marking this up. Because if I'm sometimes marking up this view and sometimes marking up this view, I'm getting very irregular results. So always normalize the data. I come over here. I can do this either on the candles or the line chart. I go to my horizontal ray and I'm looking, if price is moving down, I'm looking for the most significant levels to the downside, typically about 3, okay? About 3, but there's not a lot. So my next level is going to be here. And I never used these levels. I always used my areas of interest, and I'll show you what those look like here in a second. Because I just feel like they got respected better. They were seen, and it kept me out of the spreads and the slippage, all that nonsense. But now, since I can't find another level to the downside, I have to go up a time frame. So I go up a time frame. Here's where we're at, the 4 hour time frame. I get one more level. I'm just looking for where price has stopped, preferably with more than one touch. But I don't even have to use this. Instead, another way to do this is, and I didn't even know these were order blocks at the time. I didn't know what an order block was. It's just how I learned to see the market with my eyes, right? I'm not saying it has to be your end all be all, because it's probably not. But some version of it might help you a whole bunch. It might just be that thing that kind of takes fair value gaps and imbalances and order blocks and supply and resistance and support and demand. And you guys get the idea. And it puts it into a box that you can actually understand. So here's price that's moving to the downside. We've got a lot of imbalances. We know it's an imbalance. Why? Because of where price has stopped before, right? There's nothing has stopped it here. Nothing has stopped it here. So I don't care what ICT calls it. And I know a lot of people spread a lot of hate toward him, but the reality is he's a great teacher, whether or not you agree with his concepts. Okay. So I don't know him from Adam, but I think he's obviously a decent teacher. Whether or not he's profitable, whether or not he's amazing at anything else, I don't know. But I just know he's a great teacher. So with that said, we know without a doubt this is likely a very imbalancey area. So I have that labeled up. I'm just kind of showing you a couple of things. Imbalance is what? It's also known as a fair value gap, right? Now they have their what is it, balanced price range? So it's when both sides are also imbalanced. It's a whole thing. And they make up cool words, but I think it makes it harder for people to learn. But either way, we know for sure those are two imbalances that we'd be looking for. But for me, prices moving down, I didn't care about any of that for the most part of my trading journey. I was just looking for what I called was areas of interest. And how I found those was right before a peak. And if you can't see that peak on the candles, it's really easy to see it on a line chart. So it's literally right before the peak, also known as, oftentimes that's your order block area, right? It's where price is turning around. This right here is a great order block because there's a lot of, and then you can talk about breaker blocks and all the different ways that ICT and those concepts, what is it, smart money concepts and everything defines this. I can't be a teacher on that stuff. I can just tell you price has moved into this area a lot and rejected a lot. So price has found balance here, right? It's moved in, moved out, moved in, moved out, came above, came back down to retest. When did it stop? Right in here. When did it try to fake you out? Right here. Came back up. This is probably wick. I don't know. I'd have to go to the bigger, turn the candles back on. But look how much price has liked this zone, right? It's a pretty big zone. But that's where I'm finding my areas of interest is I want to know where price has stopped a lot because whatever this area is, big money, institutional levels, however you want to define it, they see value here. So I see value there. And I try not to target the peaks, like where the tips of these candles are. I try to target before those peaks. So if this is the peak, I like to see at least more than one touch point. See how we've got a couple here, which I don't even need to draw it that way. I can just see that from right here, right before this peak. This peaks out, makes a V. This peaks out, makes a V. This area makes a V. I'd be putting one here. So as price comes into this, I know I'm looking for a break and a retest and I'll buy up. If price rejects off of this, I know I'm going to sell it back down to this zone. And it kind of goes into that whole trading in the zone concept by Mark Douglas. And the same thing to the downside. We've got a peak here. And what else do we have? Right here. So we've got this little level. And if we backdate and actually did this, you might find, holy cow. And it's really cool to see these levels get respected so much. Like we didn't know this was here. We just know that this was the turning point. And it's going to be kind of janky, but you guys get the idea because this, I had no idea that's back there, right? But I can tell where these levels of what I call areas of interest. I don't need to know necessarily the difference in all of the balanced price ranges and fair value gaps, inverted fair value gaps, multi-time frame fair value gaps is inbound, all the things, right? There's 3 different kinds of fair value gaps. None of that really matters to me. And in fact, I didn't know what a lot of that was until the last few years. I literally didn't know. But this is what I would do. And then I'd use my JGS, which as you know, is just a couple of moving averages and a MACD confirmation with a couple of rules. And I'd wait for price to get in any of these zones. Or like if I was looking to sell this morning, I'd be like, cool, there's not a lot stopping us here. So I know I'd be safe to take it all the way down into this area. And it doesn't mean it's going to do a straight tank like this. It could, go slow or go fast. But if I'm selling, I've got a pretty good likelihood that I'm going to come down into this range. So I would take my entry, usually swing trade. I would scale out of some of the positions. So I was able to take heavier risk, which means I can make more, knowing that I scale out of a lot of the position up top. If I get the retest and confirm I'm right, I can add more in and do the same thing over and over, making this 5-10% trade worth, 50 to 60% to give you an idea. But if I'm wrong, right? If I'm wrong on the direction, which sometimes you're going to be, I've scaled out of a good portion of that and it starts to pull back and does not confirm that I'm right, I can get out, but I've already got some profit. So now I'm only taking the, 2-3% loss, for example, and just do that over and over again. But now candle's back on. This is that area. So you'll notice that these little blue box kind of encapsulates the prior to the tips, right? Prior to the peaks. And that's all I've ever done. Forever. You can incorporate trend lines. You can, and we did that for a while too. You can incorporate whatever you want to say, hey, look, as long as we're staying above, or hey, in this case, we broke down below this trend line. So now I've got a really good confirmation. We broke down below this trend line and we rejected off of multiple areas of interest. I know I can sell, and I'm pretty confident of that sell. And so I did. I just go from the top peak to the bottom low and put the fib down. You can do the 79%. A lot of people do 79%, 50%. I've been doing a lot of 50% lately. I know one guy who does the 12%, and he's, super successful in his own right at what he does. A lot of people do the 70-ish%. I know some people who do measured moves. I know I'm just kind of convolutedly messing, just going through it. But if we get this move to the downside, and my Fibonacci is not going to be optimized for this, so please forgive me in advance. But let's see, 50%. When we come back into 50% of this move, so this is the top and this is the bottom, and this is the evening I'm making my decision. When we come back into 50%, they're looking for a sell. No matter what, they're looking for a sell. Now, my opinion would be to take that concept and add JGS or Ichimoku or Breakout or something. Because once you get 50%, you still want confirmation that this is going to sell down. But who is it? Kane Trades, Kane, I don't know what is that, the rest of it is, but Kane, his ICT method that he uses, which I think is like Unicorn or whichever one, is very comparable to this, but in his own way. London versus London and New York, he waits for 50% of the move, and now I'm going to draw this on. And the reason why is simple. If the market's moving down and you already missed it, taking the retracement's risky, right? Waiting for a retest to confirm and only catching some of this move. I know that's a horrible color to use. I'm so sorry. That's probably going to be bad too. Let's use pink. Taking this move down, we've missed. Getting a retracement and just taking some of this move is going to give you a really good move. In this case, we've got an area of interest, also an order block. Okay, there's going to be a breaker blocks right here. There's going to be a lot. There's going to be a crap ton of, ICT concepts, SMC concepts, all kind of loaded up right here where I call an area of interest. And the benefit of calling it an area of interest is you don't have to memorize all of that stuff. You can just come mark up, right below that peak. Okay. And just get an idea and pay attention to those key levels. And you might do that. What I told people years ago was do this once a week for 6 months and leave it on your chart. You're going to find sometimes it was invalid. I mean, it got spit through like it's no one's business and nothing happened. But a lot of times you're going to find price reacts in and around this area. It reacts because not because you're psychic or because Jenny's a guru or because any of that stuff. It reacts here because price has reacted here before. So very, very good chance it's going to react here again if we let it, right? Very, very good chance it's going to happen again. So, I mean, that doesn't take a rocket scientist to figure out. Ooh, everything is buying, guys. Is buying. I'm gonna pull up the chat. But I like this. I like this a lot too. Just kind of spitting out different things with you guys. I heard about IML. Glad that I never joined. I have no regrets because it opened up doors in my life that I would have never opened otherwise. Like, so I don't have a lot of personal regrets. But nowadays, you're doing the same thing on YouTube. I mean, you're doing the same, not you, not calling you out, but we as a people are doing the same thing on YouTube. We're just doing it different. We're doing, instead of having it on one website, we're doing it on, YouTube, and we're calling it a good idea. It's not a good idea, in my opinion. I think it doesn't have to be me, it doesn't have to be any person. I think pick one or two methods that you really see well, find a good way to mark up the chart that you can kind of duplicate. Doesn't have to be perfect, but you have to A, be able to duplicate it, and B, you need to be able to prove that it has some amount of value. Okay. That's it. And then get really good at that, optimizing that long term. Because I would have never found trading without them. I likely wouldn't have. The trajectory I was going was dynamically different. Very, very different. So I have no regrets, but I usually do top peak to bottom low. You guys, there's so many strategies. One of the methods that I taught years ago was Okay, I'm gonna go to new pair. Let's go to silver. All we're doing, normalize the view, 4-hour time frame. You're looking for the most recent engulfing bullish candle and the most recent engulfing bearish candle. The highest engulfing bearish and sorry, the highest engulfing, you know what I'm saying. Lowest engulfing bullish is here. This is my supply and demand. So this is how I was taught by one of the people there. I think it was Steven. Reasonably sure. So this is your area of interest, which is funny because now that we know that, that also lines up with the order block and some of those mentalities taught by SMC. The most recent highest engulfing kind of big candle. Well, this is one, but this isn't the highest. This is cap, all of that is. So we wouldn't have that. We wouldn't have one up here. But all you're going to do is you're going to encompass the body of it, not the wick. And that's your zone. So I wouldn't make this blue because blue is my area of interest. But in this case, it happens to be my area of interest. So in this case, you don't get to mark that up. You only get to mark up the high. And it's kind of cool. And you mark up the low. And you wait for price to get in those areas. A lot of people use order blocks or some version of it. So if price is moving up, you wait for your first bearish candle to close, go to a smaller time frame, wait for you to retest back into that area, and you sell 10 to 1, 5 to 1, but no less than 5 to 1. And they claim huge accuracy on that, but the problem with that concept is you can't have a stop loss that tight and then have huge accuracy, because technically this trade would win, but it would stop you out with that tight of a stop loss. This trade would win, but it would stop you out. This trade, first bearish candle, and you do it over and over again. So you'd have multiple losses, and then you have this candle, we never come back in. Well, this one kind of does, but not into the body. You stop out. Step out over and over again. But yeah, that's that. Hey, now that we're done yapping, anybody have any questions on marking up your charts? And guess what's moving? NQ is finally making its move. I'm glad I did not get sucked into a buy. I'm not the buy, the sell. I wish I was in the buy. That would be awesome. But this is, I know it felt like a long time, but this is what we missed. You did hit the one target, but now you're coming back up. You've got your first impulse candle. You've retested that, and now you're continuing, getting ready to break above, at least into this range of the VWAP. You've got a great potential trade. This is a counter trend trade. So you'd really want a bit more of a retest to really confirm this direction, because this is counter trend. Otherwise, you'd be waiting for that safer move overnight, which is going to retest at least 50% of this move. To give you an idea, if that's 92 points, we're looking for about 46 when price comes into here to see how price reacts. We're not just going to sell because price hits that range. We're going to wait until we get a good 50% retracement of that move and start looking for potential sells to the downside. And that's it, over and over again, because now we've got a retracement that's confirmed. If we fail to continue the downside, I'd wait for a retracement to buy back up. I usually do. Yeah, I'm working on it. I'm working on being a millionaire overnight with all these prop firms. I think I was substantially better off trading my own money because I didn't have to buy my own money accounts and for a whole host of other reasons. But we're working on it. We're working on it slowly but surely. And millionaires not that much. Like to be no millionaires, that's not it. Like I don't know how big your family is, but I think most of you, 3 million liquid or invested means you can never work again and still live a really good life. At least that's kind of a number based off of one person by my math. For maybe 3 people, it's about 7, 8 million. And that's assuming you want to leave them multiple millions of dollars and live. And I'm not talking like buy Lambos. I'm just talking take 4 trips a year, international, live in a nice neighborhood, eat at nice restaurants, bless strangers, you know, buy baby formula for babies who maybe didn't have any baby formula. Just all the things, those kinds of things. So,
Get
but
to the
okay.
point once you have enough capital where if you know how to make the right financial decisions off of it, and you're not outspending what you're making, it comes to the point where you're making more money just passively based off of how much equity you have.
That and I had a break meeting with somebody today saying, okay, what are the actual goals based off of the capital you currently have? And it's not that much. Again, I think the reason people want to make such a huge amount is because they're trying to replace everything with that. But if you just do it a little slower, you might find, of course, somebody with let's say 500,000, they don't need 10% a month. They don't need that at all. Like it's nice, but they don't technically need that. And that 500,000 is not even a huge amount, guys. 500,000 is really sustainable. That's two really good quarters with these prop firms. That's it. Two really good quarters with these prop firms. Make it three. So I figure it's going to take you a couple bad quarters in between. So a year and a half based off of 10-ish accounts. Okay. That's all that is. It's a year and a half away to have $500,000 invested, provided you don't spend it or buy the Lambo. Again, you actually just invest half of it into low cost, things, high yield, low cost things that average 13% a year, and then the other half you do something high risk or the 30% high risk, and then that's making you 300,000 a year hands free ish off that 500,000. That's my kind of math. My kind of math for sure. But okay, if you guys want your trade, this is it. I still think the big sell side on ES potential, you can let this pull up, kind of retesting a good portion of this, but I think we have not taken these lows. Otherwise, NQ, a good 10 points easy. I don't know what that is actually. Let's find out together. Otherwise, I didn't take a trade tonight, and I'm okay with that. Again, I was down on the day. That's 21 points. I'm not trying to be any more down. I just wasn't willing to risk another 10 points. I just wasn't willing to risk another 10 points today. I was like, mm-mm. So that's it. If you like this video, please make sure you like, comment, and subscribe. If you have not already done so, go to the website, sixfiguretradingcoach.com. We are building there. The developers should have some of the automation out very, very shortly for futures. Very excited about that. If people know to go low and slow, okay? We have automation in the form of Dragonfly and a couple of other cool things in our work. We're also kind of kicking around some ideas in terms of some mentorship things, but I refuse to do it if people aren't using like TradeZilla and they're taking more than 3 trades a day. Because if they're taking more than 3 trades a day, it's too much data to go over and things to discuss. So it's got to be compartmentalized. But I think that would be something cool. And then some done for you kind of ninja trader services for automation, which is distant but potentially possible. So we know everyone's having a hard time with automation on TradingView because they don't know what they don't know. There's a lot of API connections. There's a lot of websites and subscriptions involved in that. You've got to have Traders Post IPO or Pick My Trades, or you've got to have one of the plethora of services, and you've got to check it all the time versus just having NinjaTrader on a VPS, which the VPS at most the cost is $20 or something. Like if you just literally have NinjaTrader on there, and you don't have to worry about any of the managing or misfires because it's all on NinjaTrader versus trying to mirror it all through a mirror of a mirror. Um, I just want the most reliable automation possible. Because if this could make you on 5 or 6 accounts, couple $100 a day, if you're lowballing it, let's just say 500 a week, that is not bad. That is not bad at all. With funding Tix's new program, you'd be making, I don't know, that's 6,000, so 12,000, at a 90% split, 9,000 a month hands-free based off of those accounts. I'll take Profit Trader on the other hand, you can make way more because there's no limit on that that withdrawal. Eventually, you still got to build the buffer though. Still got to build that low and slow as always. So sorry guys, no trade tonight. If you have questions, comments, go put them in the chat. If you're not already in our Discord, definitely go check it out. And please be careful for any fake me's out there because I'm not barely DMing people back to begin with. Better yet, DMing people at all. So please, please, please protect yourself. I cannot control all of those profiles out there. Otherwise, hope you guys have a great evening. Thanks for chiming in. Take care and God bless.
Thank
Good
you
night,
greatly,
everyone.
Jenny.
Bye, guys. We got to check on David and Joshua.
You almost said Josiah.
I did too. I did. But in my heart of hearts, he knows I know his name mostly. We got to check on him. I was thinking about him. He was in my heart. So But happy trading, guys. I hope you guys have a great evening, and I'll talk to you guys on Thursday.